These very insightful discussions by AI algorithms. Now, who better to discuss AI's transformative and transformation of banking than someone at the regulatory heart of all. في قلب الدنيا كلها المعمعة كلها. Dr. Amira Abdel-Aziz is the senior advisor for data science and advanced analytics at the Central Bank of Egypt. Amira will share how AI is transforming banking from fraud detection to personalization to risk mitigation. She'll also address implementation challenges and provide strategic framework for institutions to future-proof their operations. Please give a huge round of applause for Amira Abdel-Aziz.
Thank you. Thank you all, and I'm very happy to meet you again this year. I was here also last year, and the team who organizes this conference is really a great and friendly team. And we have some here in the back and here, so they're very nice. So I'm happy to be here. And today I will talk to you about some AI implementations in banking and the different challenges which come with this, the infrastructure that is supposed to be present to support this, and of course some small figures of how implementing AI improved the performance in banks, and of course comes with this that organizations who are not going to try to adopt this technology because it's moving and developing very rapidly will fall behind, such as many examples as we know, but not in banking, like companies such like Kodak, which was really an amazing company, but over time it did not really adopt the technology as it started progressing, and then it fell behind, and there are other examples. So to start out, of course, AI tools optimize performance in any field, especially in banking, because in banking it's not only about improving the finances and the lives of people, but also as central banks also start to adopt this, it's really for understanding more the economy and the financial sector and trying to always monitor how stable the country is in terms of financial and economic stability. And so since I had the privilege of working in both a commercial bank and the central bank, so there are two different perspectives to this, but we'll talk about this as we go along. Okay, so we have traditional banking, which was products and they're branch-centric, so whoever wants a product can go to the branch and ask for it in commercial banks. And there was manual risk assessment, and this was the traditional banking that we have all been experiencing over the past years. And recently we have AI-enhanced banking, which now more banks, more financial institutions start to adopt AI, and accordingly we have real-time data analysis, personalized offerings for customers, because now banks start to understand the customer more by analyzing the data from all the channels between the customer and the bank of all the services and the products. So we take a look at the debit cards, the credit cards, the buying behavior, who needs what at which time. So now banks can give more personalized offerings for the customers. So the customer understands, feels that the institution understands more the needs and when actually this customer needs it. So for example, you have from the transactional behavior, we see that at certain times during the year, the expenses, let's say during school installments or university installments, it's very clear from the transactional behavior. So for these people, there could be targeted services like loans with special interests, for example, or we have the buying behavior of the people. So now we can see who prefers to buy what and at which time. And of course, then there's targeted marketing, which makes a very big difference in terms of customer experience and in terms of profit making for the institution. So again, banks which fail to embrace AI risk losing 35% of their market share by 2030, and we can all understand why. So, okay, how does it start? We have a customer going to the bank, and the very first thing that is being done is that the customer asks to open an account, to have special services from the bank, and so on. So the bank can actually start to choose their customers by trying to, from analyzing data of social media, of other websites and so on, to say, for example, that these are high potential customers. These will be customers who give me a high customer lifetime value, which means it will be more profitable for me as a bank. And they start to target these people, send them advertisements, send them offerings, and so on. So starting with this is the beginning of acquiring profitable customers, for example. Then there's the onboarding, and we all know before it was all documented on paper. The next phase was the KYC, and mostly probably all of you get the message you need to go to the bank and update your KYC and so on, which is then now all digitized, so that when you go from one branch to the other, there's always the ease of getting all of your information, your details, knowing which services you had, which loans you took, and how the behavior in general of your services with the bank. And it facilitates many things. Now, the next step would be eKYC, and of course, some countries, of course, adopted this already. In Egypt, this is almost going to take effect soon, after the central bank just gives officially the approval for this. And then you have many fintechs, you have many banks, and you have many more services where you as a customer can, from the ease of sitting at home, opening your mobile phone and just onboarding yourself at a bank or any other financial institution that gives you certain services, for example, without even the hassle of going to sign things yourselves, because at the end, there will be models which contain then face recognition, and when you take a selfie, it takes your ID and your picture, and then in collaboration with the Ministry of Interior and so on, there will be a check about you, who you are, and if everything is valid, and is this really you or not. And then once this is validated, you can open the application and get the service you want. So this is really going to be a great step soon. Of course, we have now much better customer service. Before even you try to ask for any service and pay for it and then test it, you can ask a chatbot. Many banks now have this already, where you can connect with the chatbot and ask about many things before, again, taking the initiative to go to the bank, to the branch yourself and try to ask about this. You can also, again, easily ask the chatbot whichever questions you want, and it gives you clear answers and maybe even recommendations of what would be best for you. And again, banks now, and this has been going on for some time, try to analyze and see who of the customers are going to churn, which means leave the bank. So data is analyzed throughout time, previous data, and to see the behavior of people who will leave the bank, maybe go to another one or whatever. And this is one of the most difficult things to do, but again, it's one of the best things for the bank to retain their customers instead of trying to acquire new ones. It's much cheaper for the bank. The customer who is already in the bank has already some level of trust with the products and services of the bank and is willing to buy more products or get more services from the same place because they already have this trust level with the bank. And so it's much better to retain the customers. And now there are special retention units in different commercial banks which are taking really some great attention because these try to retain the customers. So from the data, we can see who will leave, and accordingly, the retention unit gives out some targeted offerings or do some targeted marketing for these people to try to attract them and retain them instead of them leaving for a competitor. Okay, so we have one part of understanding the customers is having models which segment the customers. So from the buying behavior, the transactional behavior of the different customers, you can see which customers are interested in what. So some are interested more in electronics, some more in clothes, some in jewelry, some grocery shopping, for example. And accordingly, when you segment the customers by looking at the data from the debit cards and the credit cards and so on, you can then do targeted marketing, which makes a big difference again. And of course, it makes the customer feel that they are understood and that the bank knows their needs. And of course, again, the level of trust increases and the customer would not want to leave. Why would a customer who feels that it's like having someone who knows you, understands your needs and preferences, and of course you would like to always be with this, this place. We have, again, a customer might be, and this is some new applications. You have the customer walking at a mall, for example, and then you have from the geolocation, you get some advertisement of, okay, you can go to Starbucks, you have a 10% discount on coffee for the next 2 hours, for example. And then here, demographics and geolocations are used real time to even increase offerings and give the customer chances to buy more. And this is, of course, and you use the products of the bank. So this is, of course, like a win-win for everyone. And of course, predictive product matching is like these recommender systems. So when these models learn the behavior of the customer, they understand what you like, what you prefer, and accordingly, you get specific ads and offerings for what you need. And this, of course, increases the satisfaction of the customers, as I think all of you would feel that way if you get this, and increases the cross-sell ratio by 65%. So understanding customers from all the different types of data, products, and the services, like the ATMs, the POSs, where the customer goes to buy their favorite, do their favorite shopping, for example. What are they more interested in buying and when? Because at certain times also, if there's a specific spending behavior at this time, you get exactly the right offer at that time. So of course it makes a big difference. And again, now, aside from understanding customer and giving the customer what they need at the time they need it, of course, the AI models help in fraud detection and security, because now we understand that as AI progresses, gets more advanced, we also, on the other side, have more threats and more cyber attacks. And of course, both go hand in hand, because even the hackers and the people who want to create cyber threats and so on actually use AI to do that. So it's really important to have both, and even like the cybersecurity part even goes a bit faster, but it's very difficult because, again, as AI gets more advanced, everything can be used on the other side. So it's very important to have these models. We have pattern recognition models where the algorithms analyze hundreds of transactions and then tries to see if there's any abnormal behavior in the transaction. So if the person is in Egypt and then there's a sudden transaction on the account from someone in the US, then here something is wrong. And the model instantly detects this, here, and these are anomaly detection models, that something is not right. So then again, this can be looked up in more detail. We have there is a lot of data. When you, as a person, make a transaction, we have the transaction data itself, and we have the data about you as a person, your location, what your IP is, all of this stuff, and all of this data and your biometrics are again checked by the model to see if everything looks normal or not, and even if something different happens, like you traveled suddenly or something, that gives a hint again, and then it's checked again if you yourself really are in that location, or it's another person doing a transaction through your account. Then we have multimodal biometrics, which combines the facial, voice, and behavioral patterns together to really validate that it is you and it's not a fraud transaction. And major banks prevented $3.2 billion in fraud last year just by using these types of models, which is really amazing. We also have operational excellence because, again, AI tools are also used to automate processes, hectic processes that the employee does on a daily basis, which takes a lot of time. You have, for example, you have many calculations that you need to do as an employee. You have different reports you need to collect data from, and so on. You have these AI models can really ease this and give the employee actually more time for more innovative work to be done, instead of just spending so much time on manual work, which can be easily automated and even be more efficient by AI, because we as humans also sometimes we can make mistakes, we can miss a number or write it wrong, but these models are very efficient. So automating reduces, of course, manual process, and improves the process accuracy, because again there's a really difficult, a very slim chance of something being written wrong or a number getting a wrong number, and faster processing. And of course the employee feels that they have more time to be more strategic and more innovative than just doing a lot of manual work. I'm sure many of us in our work have this, now the weekly report. Yeah? So you have to sit there, collect the data, and try to put everything together and get some insights, and all of this can be done very easily by an AI model that automates this and even is much more efficient. And you can have time to do more interesting things that add to the work and add to your own development at work. So also another side is risk management and compliance, because this is also very important in the financial sector. To minimize risk, to have these risk models to check whether you as a customer are, that the bank can approve for you a loan with, I don't know which such amount that you want. Then it checks in many different ways if this is possible, and even there are fintechs, then not banks, because some people are not banked. We know this, and especially in developing countries, this is an ongoing process of getting everyone to be financially included. So there are offerings for people who are not banked to get loans, even if not really big amounts. And in that case, of course, each financial service provider wants to minimize the risk of any defaults, and accordingly then there are models which use alternative data of the person, like for example social media data, like like buying behavior, how the customer pays the bills. Of course the customer then signs that this data can be collected, and of course everyone at that point does. And data is then collected to understand more, is this a responsible person or not? So it's more like a behavioral score, which is similar to the I-score in banks. Okay, so thousands of data points improve prediction, of course, about the person. And we have these new models using NLP, natural language processing, to summarize text, to look into so many text documents, for example, and summarize, compare. And this helps, of course, in understanding the regulations and trying to compare regulations, see what's new. And of course, this enhances a lot and improves risk management and compliance. We have anti-money laundering detection, and this is very important because, of course, now we see that there are many threats and fraudulent transactions that take place, and of course these models help a lot in anti-money laundering. We have stress testing. So for example, let's say a bank uses, and this is also done in central banks. For example, let's say if we increase the interest rate, how much would this improve the GDP? Yeah, such things. And you can do a lot with these models where you try to change the parameters and see the effect instantly to try to make better decisions and enhance the monetary policy decisions. We have data-driven decision-making now. When the institution has a 360-degree view of the customer, it can give more better services and products for the customer, do better targeted marketing, can predict, for example, which customers are leaving, which not, what the customers would love to have as a product and what not. And it enhances the strategic planning of the institution in many different directions, operationally and financially. And of course, there's then the culture in the institution that we're not going to just make decisions by thinking this might work, but actually from the data we get to analyze, we understand, and we know which decisions to make. So some implementation challenges to be mentioned quickly is that, of course, we have always organizational resistance. So people who are used in working in a certain way don't want to change this, even if the change is going to be better for them. So this takes some time to overcome. And ethical considerations, because you might have people at work that use these AI models in an unethical way, where data which is institutionally sensitive can go into the model, and these are public models, which then can use that data, or the data is then public, and this shouldn't be the case. So ethically, the people have to understand what to do with these models, which data to put in the model and which not. And this is also, this needs a lot of awareness. Of course, talent acquisition, because we don't have many people who are specialized in this field. So it's very difficult to find really good talents, but this is developing over time. Legacy integration, we have many systems which are old legacy systems, and then to connect these with the new models, this is something which is very challenging. Data quality, and we all have been dealing with this, I'm sure. The data, how good is it? Because at the end, if you don't have high quality data, you have nothing as output. Yeah, I mean, garbage in, garbage out. This is a term really used for the data people. If your data is not clean, not filtered, not let's say the missing data is handled correctly, you will not get an output that gives you any benefit. So now, data infrastructure, and this is very important. These are the different parts of the infrastructure which need to be taken care of so that these AI models can work efficiently. And this is, of course, to see whether you want a cloud architecture as an institution. Do you want to use the cloud and do some as-you-go subscription, as how you use it is how much you pay? Or do you want to have the system within the institution on-premise? Data governance, and this is very important, who owns which data and who uses which privileges. Quality management, again, cleansing and enrichment capabilities of the data, and integration capabilities. And again, this is one of the main challenges because, as I said, there are legacy systems which are always there, and then there's the challenge of how to deal with this when you have a new technology. So this is a strategic framework for AI success in any organization. So you keep some balanced scorecards, make them to track the business value. Is this investment worth it or not? Because many institutions say, okay, we must have AI. And it's not about this, it's actually about an institution thinking first about the goals and the business objectives, and accordingly choose the right AI methodology or tool to implement, because you might not need something that is very big to use, while you can have something more simple and would serve better the institution. So many institutions do this the opposite way. So first, the institution needs to look at what they need and then choose the matching AI technology that would give them what they need with the minimum expenses. Build versus buy, so what to build in-house and what to buy. This is also something important for any institution to take a close look at. Again, focus on high-value opportunities. Capability assessment. Are we capable to adopt such a technology, or is the investment in such technology going to be too much for us? You can always have some AI technologies, but again, it doesn't have to be something big. It needs to just be something to serve the business and improve it step by step. Business alignment. So again, connect AI with objectives. This is exactly what we're talking about. So there needs to be responsible AI implementation from the ethical side, as we mentioned. How is this technology going to be used? And if it's going to be used, for example, at a fintech startup that gives microloans, okay, you need to ensure that you don't have biased data, because if you have many more males that apply, for example, and then you choose that always over a female, for example, then this is biased. So you need to check the data closely. Explainability, we have many AI tools that can give explanations of the different transactions, processes, and so on. So this is also something to make sure to adopt. Bias mitigation, as we just mentioned. And customer trust. When you use an AI technology, the institution needs to make the customer feel that their data is going to be private. It's not going to be public, that their privacy is respected, and the security of their funds. Of course, we have emerging trends which are coming in the future soon, like quantum computing, where now the hardware is going to be built in such a way by using physics, mathematics, and computer science that the computational capability is much faster and can handle much more complex computations. And this is going to be a shift. We have edge processing, where we have like the latency of what the customer uses is going to be much smaller, because here edge processing is more like computationally making it closer at the user side instead of being centralized, so things will go much faster. We have advanced natural language processing models, where you, for example, like using something like ChatGPT, you can just write in your own natural language, and then it gives the computations behind which happen, and then give you easily the reply that you want. We have AI and blockchain integration, which would then be also a new thing, where now AI models in specific sectors can have much more secure transactions. and autonomous finance, which is like when you have an application, and this is going to be something that will be going into a trend soon. You talk to the application, so it's more about talking. So I want to invest, I don't know, $100 in this, but I have a loan which I need to pay during the next period of such an amount, and you just keep talking to the application. The application processes all this, and then it gives you feedback. So this is going, again, to make life much more easier. So again, each business, whether it's at the beginning or an intermediate or an advanced company, needs to check and see which are the quick wins for the company.
Yeah. Thank you so much once again. And
thank you very much. So here.
For now, مفيش upcoming session ولا حاجة. For now, we're going to have a break.
Okay.
This break will extend till 4 p.m. sharp, and the agenda will commence afterwards in 4 p.m. So coming here a little bit earlier. بس لكن the lunch break, the moment we've been all been waiting for. Let's have a break and come back again at 4 p.m.